So we'll probably still have government regulations, but I believe the need for them will disappear. People will know about scam matters far sooner. All right, I think that's it.
Thank you, sir.
All right, thank you very much. Thank you.
Dolph is with us for the day, so if you've got any questions, catch him at tea or lunch. He's widely accessible. Email, internet, Twitter, Facebook, Google, Tinder.
I'm not on Twitter or Tinder. Anything with a T is just
All right, thanks for that, Dolph. We're now going to go to a panel discussion where we have the discussion on what are the risks and the rewards of the offshore property rally. With the rand in our mind, I'm going to call upon three guests. We have Candice Schultz. She is the CEO of Real Estate Without Borders and is an attorney. We have Andrew Rissik. He's the MD of Sable Group, Foreign and International Projects, and Jenny Elinas. She's the founder and MD of Cypriot Realty. Welcome to you. Okay. Now, you know, we can, for any argument to the left, there's an argument to the right. If we take the rand over time, right, from at one point in time we were 1 to the dollar, 1 to the pound, look at where we are now. If you take a long-term perspective, you can say that our interest rate differentials, our trade differentials is going to always perpetually cause a weakening scenario. Is it straight mathematics that the rand will always and perpetually weaken? And then how do we time an offshore investment in a scenario like that? If we bought the rand at 13 and it goes to 12, we have an immediate capital loss, but it could go to 15. Now, how do we balance that? If it goes this way, I lose. If it goes that way, I don't lose.
Morning, everyone. That's a very good question. That's, I think, fairly directed at me. Okay, I think firstly, let's just put a bit of perspective. Property investment is normally quite a long-term investment strategy. In the short term, you are going to see ups and downs with the rand. But since the rand became a free-floating currency after the 94 elections, I think it was the 95, and actually before that, if you look at the overall devaluation per year, it's between 7 and 8% per year. There are many, many factors that are driving the sort of short-term volatility. The rand is a commodity currency, we're an emerging market currency, and then also we're a highly speculated currency because of the yield differential on the interest rates. So the best thing to do is to take a long-term view, and you're not going to go wrong with an offshore investment. However, at the moment with this massive devaluation, I mean, yesterday we were at a 14-year low against the US dollar, record lows against the British pound, and the euro, not too bad at the moment. That's because the euro in its own right is having its own challenges. But I think more than ever now, in the last 5 to 10 years, you've got to be really careful about the offshore investment that you choose.
Candice, when you look at investing, if I went to Kuruman, I want to speak to the local conveyancer, speak to the council, speak to a town planner, speak to a local agent, obviously consult the Rueda report, obviously. But when you're going international, the South African law and what we're used to and understand, how do you get that level of comfort when you go international?
You know, that's you make a very good point. And I started investing offshore probably about 6 or 7 years ago. And the kind of effort that actually goes into really understanding the market, because when it comes to property, it's all about understanding the market, understanding the laws, understanding the regulations and the processes, and developing relationships with the agents and so forth. I just at that point realized that it's imperatively important to actually have trustworthy local partners on the ground, because you can't be an expert in every single area. And it's really about identifying a particular area that you'd like to invest in, and then developing relationships with local experts on the ground. And that can become a very very expensive exercise if you don't have local partners on the ground, because you have to consult attorneys, you have to get agents, you have to get rental and property managers in place, and you can make really costly mistakes. So my advice would be to identify a particular area that you would want to invest in offshore, stick to that area, and just develop really good relationships with people who have that local expertise and knowledge.
Jenny, there's an investment maxim that says, live where it's warm and invest where it's cold. But you specialize in receiving investments in another place that's warm, Cyprus in particular.
Yeah, correct. And Akura, the interesting thing about the appeal for Cyprus over a lot of the other countries is not only is it an Exportish colony, so that there's no language barrier, but you have a fantastic environment where you have a huge demand for property from an international perspective as well. Cyprus has gone nicely through their bailout conditions in 2013. They are recovering quite nicely. They are, in fact, the darling of investment in the last year. 2 years running, they've enjoyed 2.5 billion euros in foreign investment through the residency program. Just last month, one of our South African companies listed on the stock exchange announced that they have done 195 million euros worth of investment. They've got a 48% share in 2 of the shopping centres. We've got Wilbur Ross from the States, who personally invested $4 billion in one of the banks. So the real impression I'm trying to create here is not only from a real estate point of view is Cyprus creating positive waves, but you're looking at the big boys who are prepared to throw their dollars, their euros, their pounds into the country. So the sun has a good factor. It draws a lot of tourists. So for a short-term rental, you're going to get some nice returns on your property. But more importantly, you've got the big boys who are prepared to say this is a country we want to invest in long-term.
And if I'm looking at investing internationally and I'm looking at getting my currency out of my rands, converted into dollars or euros or shekels, whatever it is, how do I go about that? What are the requirements from a Reserve Bank perspective? And I imagine the reducer of revenue perspective.
Yeah, correct. In principle, the Reserve Bank's relaxed exchange control quite significantly over the last few years, which is good news. They're trying to create a level playing field for South African investors in the international space, although the reality, like so many things in South Africa, is that there's a lot of other regulation around it. So 4 or 5 years ago, when the likes of Wealth Migrate and IPS were selling US properties, for under R1 million, you could actually buy quite a decent property. So under R1 million, a private investor can simply move the money. So you've got your R1 million a year discretionary allowance. So all we need to do is to flicker a client, and we can buy the currency and send it to the investment destination. If you want to move more than R1 million, since the 1st of April this year, the capital allowance per individual taxpayer increased from 4 million to 10 million rand, which I think you'll all agree is quite a significant amount of money, although it was probably worth 5 million rand 4 years ago. So it's, in dollar terms. But you need a SARS tax clearance certificate. So when they made the change in April, they were issuing tax certificates up to 4 million rand, a foreign tax clearance certificate. Since then, we haven't really seen a foreign tax clearance certificate that says 10 million rand on it. We've had a couple of letters of clearance coming through. So they are, the minute you go over the 4 million, it kind of triggers a little bit of a SARS audit, which obviously slows things down. We've seen some clients waiting up to 6 months, and we've had other clients that have come through a bit quicker. But my advice to all of you is, if you are buying offshore and you need your capital allowance, is before you commit to any executing or completing a deal, make sure that your money's ready to move. Because in the last few months, we've had probably 9 or 10 clients who've actually paid quite big penalties because they haven't actually got their funds out in time.
Sure.
So that's important.
Do I read it right that there's a differential? Internationally, you can take so much, but if you're investing in Africa, they're trying to encourage that, and you can take more.
Outside SADC, it's the same. So within SADC, there are different rules, but if you anywhere in Africa, it'll form part of your personal allowance. For companies, it's different. So a company can make offshore investments provided it's in the same line of business. So if you're into manufacturing lingerie, you can go and set up a lingerie shop in Beijing or whatever. You can move up to R1 billion without Reserve Bank approval. per year. Your bank just needs to give you approval. And you can also invest in, what the one thing companies can't do is they can't invest in passive investments. So in other words, a company that manufactures ball bearings can't buy a shopping centre and earn a rental income.
Appreciate that.
What I have found is some of my clients who are wanting to maximize what Andy was saying about the 1 million per year, they will customize the contract to sale agreement with the developer or with the person directly and say, for me and the mom and my wife, we'll each take out 2 million this year, and then early in 2016 we'll do the next 2, and then we'll try and structure the payment that we actually can fly under the radar without having to get the SARS clearance. That is legitimate. There's nothing against it. It just means that your payment terms will need to be negotiated with the developer or the seller directly.
Candice, we're quite familiar with the South African deeds office processes. An offer comes in, it's time bound, you have to perform by a particular period. We know in the UK you've got the whole gazundering. From a legal perspective, South Africans looking abroad, what areas and jurisdictions are familiar to us? Because I'd imagine the learning curve and the price of it going wrong, we don't understand entirely. Where would you say avoid? Where would you say looks like South Africa that we can understand?
Well, interestingly enough, South Africa has one of the most complex transfer processes in the world. And with some of the complications that we're facing at the deeds office and in terms of getting your clearance certificates and so forth, it's now become one of the longest processes as well. So when you're looking at an investment, you actually have to factor that whole time period in that it takes you to dispose of the property. I mean, I was recently involved in a transfer process that took 8 months for a normal residential property because there were issues in terms of getting clearance certificates and so forth. If you're looking in the more developed countries, the processes are streamlined, they're simple. You can look at a couple of weeks transfer process in the States, and it really just facilitates and makes the whole transfer process so much easier, and it's just so much more predictable as well, and it facilitates alternative forms of investment. So if you're looking as a South African investor to do a fix and flip, all of a sudden it's not such a fast flipping process, because now you have to factor in this very undetermined transfer process, whereas in the States, you can just factor in a couple of weeks in that whole transfer process.
Okay. Jenny, could you just take me through your sweet spot? Who is your typical client? What exposure have they had? Do they take on debt in the environment there, or are they gearing here in South Africa and then exporting? What are the differentials there?
Well, Kuru, the main draw card for Cyprus at the moment is they have one of the most favourable permanent residency programs in the Eurozone. The other 4 countries that are offering it are Portugal, Spain, Malta and Greece. Nobody wants to touch Greece at the moment. Portugal has a nice contingency plan where down the line you can apply for a Portuguese passport. There are some disclaimers though that you need to pass a basic Portuguese language test to be considered a citizen of interest. Malta and Spain both insist that you are domiciled there for tax, so that obviously lines with a lot of potential clients. My typical South African client is a South African. Very Afrikaans is a big draw card, specifically in terms of being able to hedge and have an asset overseas. In terms of financing, most of my clients are either raising capital in South Africa and doing the paying here initially, because the minute you're trying to raise capital overseas, with our volatile rand against the euro, you can fall short unless you factor in at least another 2% over that. The company I do represent has got an in-house bridging finance facility, where as long as you put down as little as 30% down, they'll finance you over a 9-year term at a fixed rate between 4 and 6%. So the good thing is, once you've got your property on the market and you're earning a nice rental income, that'll more than cover what you're looking for and you're earning a little bit extra income. But typically it's Mr. and Mrs. Joe average. They're looking to get residency so that they can get their Plan B in place in the Eurozone. Cyprus's residency program allows your dependent children up to the age of 25 to qualify, and they also have the most favourable citizenship program in the whole of the EU at the moment. There are 3 countries that are offering passports through investment. You've got Cyprus, Austria and Malta. Malta's program insists that you have a big donation to the Maltese government. Austria, you're going to have a lot of euros down. Cyprus is by far the quickest, but it's going to cost you. But in essence, you're looking at people who are wanting to leverage, have an asset overseas, in the Mediterranean, in the sun, that you can rent out. Life continues in South Africa. And Candice, I can echo what you say, have a good local provider here It's going to look after your interest, look after your asset, and make sure everything runs smoothly.
I know it's difficult to say, but can you give me a typical transaction? Is it a €1 million property, 30% down, 5% interest rate, 20-year repayment?
Yeah.
What are those kinds of
Currently,
things?
looking at the entry level for the residency in Cyprus is €300,000. You need to put down 2/3 in cash to be able to get the process to qualify for your residency application. So you're looking at your 2-bar, €200,000, down in cash. The balance, most of them are either funding locally in South Africa or take the in-house finance.
Okay. And the farm. Okay. Thank
So
you.
that you're looking at a 9-year term at between 4 and 6% per annum.
Yeah. 2-bar euros. I'm just out, eh? Just out.
This is the 2-bar is in rand, so 200,000 euros.
Ah,
Yeah,
okay.
gotcha. Gotcha.
Thank you. Andrew, talk to me about the strategy of hedging. When you're making this investment in an uncertain currency, there's a give and a get once again. That it's like you're in a local environment. Do you fix or float your mortgage rate? How do you risk manage a currency exposure?
I think that's a very good question. There's a big difference in the South African context between a private individual again and a company. Companies are allowed to buy forward contracts. They can buy currency at today's rate with a slight sort of premium on the rate for delivery at some time in the future. But under South African exchange control law, individuals can't do that. Private individuals in the UK can, for instance. So, that's just one of the downsides of living here. But the Reserve Bank doesn't like individuals speculating in currency. A lot of people do it privately. But as an individual, there's no real way to formally actually hedge and buy currency for a future investment. So the hedging that an individual does is either you just buy currency now at today's price. It has to be delivered offshore. You can't hold it here. So you can either push it off to an offshore bank account in your name, or to any third-party investment destination, so it can be shares, stocks, etc., etc. So really, I think the best way to look at hedging yourself and balancing your risk is maybe to look at a portfolio of offshore investments where you've got underlying exposure to decent currencies, and I say decent currencies, I mean they all have their ups and downs, but just look at the ones that long-term always are performing well. The Swiss franc, the British pound. I mean, in the European context, the euro's got structural issues because of all the different countries that sort of are trying to fit into this rigorous framework. Like the Reserve Bank in South Africa can use interest rates to tweak its economy by moving interest rates and control inflation. In the Eurozone, if you do something, the effect on Germany is going to be very different to what happens to Greece. So that's causing problems. The Eurozone has got issues, but I'm not saying it's not a good currency to be in. It's quite cheap to buy into the euro now. But long term, I think US dollar, pound, Aussie dollar is very good to buy now because it's quite devalued because of the commodity issues. But I think Australia is a country to invest in. So yeah, I think probably good to talk to some advisors and get some advice on that.
Now, Candice, when you're wearing your advisor hat, what is the typical conversation with a South African looking abroad? Is it hedge against the rand? Is it a capital appreciation? Is it a diversification strategy? Or is it a capital play using leverage in another country?
Well, I mean, essentially, it's all of those things that one would have to consider. But predominantly, I mean, it's a hedge against the rand, and it's really just diversifying your portfolio. I mean, if you were living in a developed world, and you had to ask your advisor if they could put their entire wealth into an emerging market, I mean, he'd probably say, well, don't be insane. Because of the unpredictability in certain, in investing in emerging markets. But obviously, with investing in emerging markets, it's higher risk but potentially higher return. So it's really about balancing your portfolio and just making sure that you are diversified. At the end of the day, we should see ourselves as global citizens, as Dolph DeRose said. There's nothing to say that because you're living in South Africa, all of your property investments should be in South Africa, provided that you have teamed up and you've identified credible partners who have local South African representation but are very strong in terms of the country that they're assisting you with. There's no reason why you shouldn't be looking offshore.
Now, when you're doing property investment, Jenny, geezers go, tenants duck, and those good things happen. If I'm sitting here in the middle of Kempton Park and my geyser goes in Cyprus, who's going to fix it?
Right, you're going to have a reputable managing agent on that side. The beauty about it is that they will have a mandate that you've given them to basically do any of the small adjustments up to about 100 or 150 euros, and that you're comfortable. All they'll do is they'll notify you and say, listen, Kura, just to let you know the geezer's burst, we've got a plumber in, here are the 3 quotes. Are you happy that we sign with Mr. Tom Jones? Yes, thanks very much, and off you go. It's all key about making sure you align yourself with your middle partners on the other side. The last thing you want is to actually go involved with somebody who actually doesn't know what they're doing. They're going to take your money and run. Out of interest, how the agency works in Cyprus is that on a short-term rental, you're looking at 20% of your rental income to go towards your agent to look after the property for you. On a long-term rent, you're looking at a month out of every year. So it's very similar to what you're doing in South Africa. But the key again is have your team on that side who's going to sort it out for you.
Andrew, when the market is greedy, be fearful. When the market is fearful, be greedy. When the market is calling 30, 40 by year end, I tell you, but I promise you, what do you advise? What do you advise as a strategy when acquiring currency at these levels?
Yeah, be careful. When we saw the rand at these levels, I don't know, 10, 11 years ago, South Africans, there's a panic mode going on at the moment, there's no question. Our business is seeing record flows month on month upwards, which is, I think, quite sad. But at the end of the day, all countries are competing for capital, and there's only a finite amount of it worldwide. And every government that's being run properly are creating really attractive incentives to attract capital. And so South Africans have got really good alternatives, but it's very expensive now. And I think the key thing to look at is, whilst you're panicking, what you must do is make sure that the investments that you're buying in those hard currencies are really good investments to a local person in that environment. So if you're going to be buying a property in the United States, just make sure that an American is going to go in and buy that same property, and it's going to be an attractive investment for them. Because foreigners globally, I mean, it doesn't matter what you do, whether you're a private individual or a company, when you walk in, they see it, it's blatantly across your forehead, and they're going to load the prices. And a lot of these kind of residency investment schemes, etc., where the minimum investment amounts, for instance, Portugal, you have to put a minimum of €500,000 into real estate. There are other categories as well, but there are operators there who are taking properties that are worth 350, they're just selling them for 500, so the investor meets the criteria. So just be really careful. And but it's, I think there's still good value in foreign terms, because the property markets overseas are still not where they were before the crash. I think in rand terms it is scary though.
Candice, as a destination, what's giving you a twinkle in your eye? Name me 3 places where you're looking at and saying, I would advise investment in that direction.
I'm primarily looking at the United States at the moment. I mean, it's such a vast and big place to be looking at, and there's so many different pockets of opportunity, and each state within the United States has different kind of fundamentals and different opportunities. So I've actually identified 3 areas of opportunities within the United States, just because the investing in a dollar-based investment is just still very attractive. I mean,
can you give me 3 specifics?
Looking at Florida, particularly Lee County, which Florida was very badly hit during the financial crisis and hasn't fully recovered yet. So it means that there's still a lot of opportunity for appreciation. You're also looking at a lot of migrant labor coming into the area. So there's an increased demand for property. Property is still undervalued. And the houses stay on the market for a very short period of time, so it's very marketable as well. I'm also looking at Louisiana, Probably not for a longer term or longer term hold strategy, but essentially more of a fix and flip opportunities because of there was during probably about, what was it, Katrina, about 10 years ago, I mean, Hurricane Katrina completely wiped out the area, and there's still a lot of opportunity in terms of rebuilding. We're seeing a lot, Louisiana happens to be part of the shale states as well, which is seeing significant growth, and you have a lot of people coming into the area, employment and wages are going up, and then Texas, Houston. Significant growth from a capital appreciation perspective, seeing good rental returns. Yeah, so those are the areas.
Appreciate that. I'm going to take a couple of questions from the floor. Irvin.
Yeah, my question is to Jenny Elias. I last checked, there was a oversupply of houses in flats in Cyprus. What's happened since the crash crisis, and we already know that it's before, and what's the chance that actually get us in for this new outfit?
Sorry, the statistician is asking, what is the Ruda house price report in Cyprus saying? Go for it.
It's like any country, location. So of course there were some areas in Cyprus where there was less demand for property types, so that's where you would get the sudden flood into the market. What we have found is over the last couple of years with Cyprus recovering from their bailout, with the announcement of the natural gas that they've got in their economic exclusive zone. Just to digress on that one is next year they're starting to build the power plant in the eastern side of the island. Cyprus will be the hub of natural energy. Everything coming from Israel, Egypt and the Middle East that is going to be pumped into the Eurozone is going via Cyprus's infrastructure. So we found that there's been an enormous boom in demand for property in the locations about 60 kilometers from there. But by far the most interesting place is a little suburb called Paphos. It's on the western side, very similar to the Western Cape. Of the 2.5 million European tourists that come to Cyprus every year on holiday, 40% choose to holiday there. You just got to factor in, look at Cape Town. Tiger Valley versus Camps Bay. Where are the holiday makers going to go? Where do you want your asset to be? Where do you want the tourist to go and enjoy the good rental? You're going to want to go down to the touristy area. And that's where my clients are getting anything from between 4 and 9% net return per annum, only during the short summer season of summer, because they've got the location quite well. Basically, the tourists coming from the Eurozone are quite lazy. We're adventurous as holiday makers. What they want to do is they want to catch the plane into the island, catch a shuttle from the airport into town, veg by the pool, they want to be 4-minute walking distance to the beach, they want to be on the promenade, near the bus routes, etc. And that's where those developments are going to be a solid return. The group that I represent have got some developments. We have a minimum of a 4% guaranteed rental return for the first 3 years of you owning the property. And because Cyprus's tourism has gone increased, because we're having this huge amount of foreign investment, there has been a bigger demand for property. But in answer to your question shortly, location.
Thank you.
Do you want to expand on that?
Can I take?
Are you cash positive right from the start? You wouldn't get a high
Irvin, you need to put down 50% down before you start being cash positive. Yes.
How is the oversupply?
Again, it all depends on certain areas. The grotty old little places that nobody really wants to go, and there'll always be those on the market. Where we are finding the demand is for the lock-up and goes. So your typical townhouse developments, that is where there's a big demand, not only for holiday makers, but locals who are living there. And because of this huge, big increase in foreign investment and the spurt on the economy in terms of things that are happening, another sideline is that Cyprus is going to be announcing this year the casino license, where they wanted to build a couple of casinos on the island. Up until recently, they haven't had it. This again is going to draw huge amounts of foreign tourism investment, and not everybody wants to stay in a hotel. A lot of them want to be in the lock-up and go. So the dead ducks are going to remain there, but you are finding that the biggest demand are in the townhouse apartments.
Clive, I'm going to just the discussion we can have out over tea. Can I take any further questions? Yes.
Yes. All of my clients that have invested in Cyprus, they leave the money there. First of all, it starts to build a nice nest egg. And the most important thing is you need to chat to somebody about creating a proper legacy. Cyprus has got some very good personal tax benefits. Number one, there is 0 inheritance tax. And And if you structure it properly, on your death, you'll be able to dispose of your assets to your loved ones without paying 1 cent to the Cypriot government. Also, they have a very favourable personal tax structure. Your first €19,500 that you earn from earning a rental income